Hello, and thank you for joining this quick run through the very latest technology available for small businesses, Predict. Predict will enable any small business to see up to 3 years ahead of their future cash and operational performance. It's done instantly, there is no setup, it is easy to use, and you can then work with your accountant or advisor to plan the best way forward through either opportunities or threats that may lie ahead in your business. So very quick to get going. You can see on the home screen we've got a daily cash balance for the next 3 years, which is automatically generated as soon as you connect your Xero or QuickBooks bookkeeping software up to Predict. We generate this cash balance for the next 3 years by combining lots of calculations across the short, mid and long term, but it's presented in this simple, easy to use format, so you can always know exactly where you are on either a monthly or on a weekly basis. First up, let's look at the short-term cash flow for a business. And this is where we look at the due invoices and bills that you are going to have to pay or that you're waiting to come in from any of your customers. We automatically pull in all invoices and bills from either Xero or QuickBooks twice a day, every day. And by pulling them in, you can see that we then know when they're going to, or they're predicted to hit the cash balance of your bank account, if they're an invoice coming in, or of course, if they're a bill when they are going to go out of that bank account. From within this area of Predict, it's very easy to be able to manage this short-term piece of the puzzle. You can see here we can change the expected date. So this invoice at the top is due on February, but if we actually know they're not going to pay through to March, for example, we can easily bounce it to being March the 31st, and it will update the cash flow accordingly to ensure that we see that cash hitting the bank account in March and not in February. You can exclude any invoices or bills. So if there are some aged debt sitting in your business, you can very quickly take that out of the cash balance to ensure that you're always looking at an accurate picture of your short-term cash flow. If we then move to your mid to long-term planning, we're then looking at our predictions that we've generated across your P&L, so across all of your sales, any of your costs of sales, or any of your expense lines. Now, this is where Predict does a huge amount of the heavy lifting for you. If I just open out these lines, you can see that all of them have got this predicted line underneath every single account line. That is done, and it's done across the cost of sales and right the way through to expenses. That is done when you connect your bookkeeping software up. To generate these predictions across each of these account lines, Predict looks at your historical behaviours with each of these accounts. So it goes and looks at any customers, how they've paid you. Have they paid you with cash or invoices? Do they notoriously pay late against this particular account? Or do you pay your bills late against this particular account? Has there been any seasonality trends in there? Do we see it goes up in December and maybe it's quiet during the summer months? We also exclude things like COVID. There's been a lot of outlying performance as a result of COVID, and we ensure that they are not included in the future predictions if they are particularly anomaly results. We use all of those calculations by looking at that historical behaviour to create that forward predicted picture for that particular account line, and we do it across every account line in your P&L. Now, because there's so many calculations, we want you to be able to be confident in the numbers and trust the numbers that are being generated by Predict. And so if you click on any of the predictions, we explain exactly why we forecasted this particular amount. We even see, for those accountants or those working with their accountants, if you have journal movements against a particular account. So journals are often used in bookkeeping, and we will recognise those movements, and we will ensure that we recognise the activity from journals, and we'll also ensure that we recognise the correct cash movement to those particular journals. If you're seeing, though, that we are not predicting something that we don't know about, because we are basing our predictions on what has happened in your business, but you may have taken on a new shop, you might have a new a line that you're selling, you might have a new member of staff. Predict is very, very easy to be able to add your own new assumptions in. So you can see here there is the word add, which sits against every single account line. So say, for example, in this one, we've got a florist. So let's say they've taken a new wedding on. We can simply add, and we'll do it as a freestyle, and we'll say new wedding. If we then hit next, we will then get some boxes that open up underneath this particular account line, and we know that in this wedding it's a £10,000 wedding, for example. Hit tick, and then it's going to ask us, okay, so when is this happening? So we'll say, the first payment's coming in on the 9th. And when I say payment, it's going to be a split payment, because actually there's going to be a deposit first. So maybe 30 days or 15 days later, whenever the payment's going to come in, they're going to pay 50%. And then when the wedding actually happens 60 days later, they will pay the remaining balance. But you've got loads of options in here. If you've got clients that pay by cash, or you've got a bill which has to be cash payment, you can then just simply go to single payment and have it paid on the same day. If it's just a single invoice, again, remove that and we'll put that single invoice is paid 15 days later. But for the purpose of this, let's split the payment equally over these 2 payment runs. And I'm just going to hit update. You'll now see that we've got the activity, so the sales activity, that wedding has happened in December. And then if we go and look at the cash view, you will see that we've recognised that the cash impact is actually split over 2 payments. And so it really enables you to manage the cash coming to your business properly and accurately, so you never have those scary days where you've got more to pay than you have got coming in. In terms of also adding new account lines to here, we have an additional method called import. So import is about using live spreadsheets to be able to fill these particular forecasts that you're creating. So if we look at the corporate sales line, for example, you can see that this is a regular client of Josie the Florists. And so we can add them by client name by using the import button, and we're going to use the client tracker. So it enables us to type the name of the client in and the revenue that's expected in. So if I just hit get the template, you will see it will open up on the live spreadsheet. And this spreadsheet is completely connected to Predict, and all you have to do once you've entered the information is hit sync. So if we've just taken a new client on, and we'll call them Apple Tree, for example, Limited. It's a corporate sales account because that's the type of sales line this is. There it is down the bottom, couldn't find it then. And there's 20% tax on it, and they're going to be billed on the 15th of every single month, and they take 15 days to pay. We can have it as a recurring revenue amount, or we can have it as a one-off amount. It's entirely up to you, or in fact you can do both. But we know that this Apple Tree company is going to pay this florist, it's going to do £1,500 a month, and it's going to start in, let's say, the 1st of January. And it's an ongoing invoice that's just going to keep recurring. Now we've added that client, all we need to do is go back into Predict, hit sync, and it's going to say, do you want to pull this spreadsheet in? Yes, we do. Hit sync, and it's now going to sync that new revenue line in. And if I go back to the home page, you will see now under corporate sales, if you just go to the sales line, under corporate sales, you will now see there is Apple Tree, and there is the revenue that is coming in month to month. And it is the revenue, again, if I go and have a look at the cash view, we can see that there is Apple Tree, there's the revenue coming in, they're paying every 15 days. So again, we've managed to recognise that because of that, there's no payment coming in February, again, enabling you to balance your books accordingly. And we've recognised that there is VAT added in that invoice coming in. As much as we see that VAT coming in, we also recognise it going back out. So we will automatically calculate your next VAT bill over here in Financials. So if I just come to the Balance Sheet tab, you can see here it says your next predicted VAT is, and actually in this case we're due a refund. So whether you're due to pay the HMRC some revenue or indeed you're due a refund from them, we will do that calculation for you. And that is because of the granular level with which we're forecasting. We're forecasting every single transaction that is coming in or out of your business and the associated VAT to each of those transactions, so we can then calculate it really accurately. This is a number you can rely on. We, of course, because of full planning, combine it with your cash balance to ensure the affordability of it. If you are deferring your VAT at any point, you've got the option to be able to defer it or split the payments out over any period. Exactly the same, just on the import function, goes for loans. I know a lot of small businesses at the moment are looking at lending, and we have got the option here to be able to be very easily build in a loan forecast for affordability checks, for example. So say we're going to take a £15,000 loan. We've got 2% annual interest rate. The loan period is over a 4-year period, and it's going to start in January. And if there's a balloon payment, you can then add that balloon payment in there. Below, we can very simply see the beginning balance, the scheduled payment amount, the principal payment amount, and the interest that's lying against that particular account and the remaining balance. So we can then very simply hit sync and then add it to our forecast, and it will forecast in those repayments coming in at £725 a month. So Predict will enable you either using our automated forecasting, your own added assumption lines, or indeed bringing in additional information outside by using our import function, the ability to properly manage the short, mid and long term of your particular business. Everything is zipped up into full financial statements. So if you do have to pull together a board pack, you have to submit lending, business accounts in order to get lending. All of this available in the financial section. You can see we've got a full P&L, a full balance sheet, and full cash flow statement, which if I open out the starting balance, you can see there is your projected net cash flow movement over the next 3 years. And as I said at the beginning, you can look at this either monthly or on a weekly basis, so you can get really granular at managing your cash flow, and there is the weekly net cash flow movement. And there, of course, closing balance, that would be the bank account during that period. Everything can be exported. You can see here's a document image. Everything can be taken out and then delivered into lending companies or delivered as a board pack, as I did say previously. And that pulls together the very quick run through of the brilliant new forecasting tool for small businesses, Predict. Any questions, please do get in touch with us at futrli.com or ask your advisor or accountant for any questions or help. Thank you.